Good evening, everybody. It's now 6:30. Welcome to the Audit and Accounts Committee first meeting of the municipal year. I'll read out the housekeeping first. We're not expecting any fire alarms scheduled for this evening. Therefore, if the fire alarm sounds, please evacuate the building immediately. The fire exit is located at the side of this room. And exit through reception and meet in the War Memorial Park. Webcast of meetings. This meeting is being webcast live on the internet and will be available to view on YouTube after the meeting. The microphones. Can I please remind members and officers that in order to be heard clearly within the room by those present and on the webcast, you must speak directly into your microphone. The microphone stem can be moved so that it's as close as possible. And mobile phones, please switch your phones off or to silent. Thank you. I'd just like to welcome new councillors, returning councillors, new members of committee, and our guests from Ernst & Young, and a political student guest that we have here too, Leah, at the end. We have a fairly full agenda tonight, and obviously we have split this meeting. We have another meeting in 5 weeks' time. Because the work programme for this committee for the year was looking pretty challenging over the summer if we didn't get this meeting in as planned originally. So thank you for coming. I'll move to item 1, which is apologies for absence and substitutions. I have apologies from Councillor Tom, and I think everyone else is present. So that's great. Item 2, declarations of interest. Are there any declarations of interest? I'm not seeing any, so we'll move on to item 3. Item 3 is the appointment of a vice chair for the committee for the municipal year. Can I have any nominations for vice chair? John.
Could I propose Councillor Simon Minas-Brown, please?
Do I have a seconder? Thank you, Jackie. Councillor Chapman.
Can I propose Councillor Katecha?
Can I have a seconder? Thank you, Councillor Watts. So we need to do this by show of hands vote. If I can have votes for Simon Minas-Brown first, please. That's 3. And if I can have votes for Councillor Katecha, please. 5. Okay. Councillor Katecha, congratulations. Would you're welcome to stay where you are this evening, or you can come and sit in the vice chair seat. Up to you. That's fine. Just reading my auto cue notes here. Yeah, I think we're good. Item 4, urgent matters. Are there any urgent matters? I'm not aware of any, so we'll move on to item 5. The meeting of the minutes held on the 4th of March. Only myself, Councillor Isaac, Councillor Tustain and Richard Harboard were present and can confirm these minutes. Are we happy that they are a true record or accurate record? Agreed. Thank you. Second, I'll sign the minute. So moving on to item 6, the Ernst & Young Audit Planning Report. I would like to introduce Andrew Britton from Ernst & Young, who's our new audit partner this year, and Namisha. Sorry, Namisha, I don't know your surname. Namisha's our audit manager for the year.
No, sir. I'll do the introductions for her. Thank you, Chair, and thank you, members. So yes, as the Chair said, Andrew Britton, partner at EY, been with the firm almost 30 years. Currently have a portfolio of a mix of local government and central government audit clients that I look after, as well as managing the relationship that we have with both the PSAA and the NAO as a firm. and delighted to be taking over the role from Maria on Basingstoke and Dean. I will take our report as read in terms of our audit plan for 23-24, but just to highlight a few things for members contained within the report. So on pages of our report, pages 6 and 7, we give an overview of the strategy for 23-24, taking into account, as members will be aware, that there is currently, or there, maybe I should phrase this, there was currently a process in place to put through Parliament a piece of legislation that would allow open audits for 22-23 and earlier to be disclaimed in order to correct, so to reset and then put in place recovery plans for the local audit regime. As the last paragraph of that says, the calling of the general election has obviously caused that process to pause, and there is clearly some uncertainty as to exactly what will be put in place in terms of when a new government is formed post the 4th of July election. We, as a firm, and in relation to Basingstoke and Dean, are therefore continue with our plan as originally laid out, which is to put in place plans for the 23-24 audit in line with the guidance that was received a year ago from ministers to move to the most recent financial year and provide assurance over that. So the basis of our report therefore is on that point, and as it says on page 7 at the bottom, obviously at this point of uncertainty, can't comment any further in terms of what will come out, but clearly as things progress during the course of the next few months, we will keep members up to date with the latest developments. In terms of 23-24 specifically, you'll see on pages 8 and 9 we outline the risks that, as a result of our planning procedures, we will be focusing our work on. And therefore, in terms of the work plan that we have, that we'll develop, those are our main areas of focus. A few things to highlight on that. You'll see the ones highlighted in yellow are new areas. Those are new areas primarily because of a change of circumstances. So, in the case of we've got a new area of risk, which is in terms of recognition of rental income. Given the size of the rental income that that the council has, and the fact that under the ISAs where we have what you would call, I guess, non-standard income, we are required to consider it from a revenue recognition perspective. We also have two other additional risks that we're highlighting to you. One relates to IFRS 15, which is the new accounting standard in relation to leases. There are disclosure requirements which are new for 23-24, so therefore, again, anything that is new or different we tend to have a focus on. And then the final one is conscious of developments in relation to the council's involvement in the Money Down project and things that have happened during the year. We would expect the council to go through a thorough assessment of the group boundary, i.e. the need or not to prepare group accounts, and so that's another area of focus for us that we're highlighting to you. The other thing just to bring to your attention is on the next page. So we set our materiality based on the, or we have set our materiality based on the outcome of the accounts for 22-23 being the most recent available at the point at which we set materiality. Obviously, when we come back and continue with our audit work, we will update that for the draft accounts that have now been published for 23-24. Materiality is a reminder to those of you who have been on this committee before, and hopefully is a helpful explanation for those who are new to the committee. Planning materiality, which is the 1.86 million, is the level of differences that we or potential misstatements that we would believe would cause the council's accounts to be no longer a true and fair representation of the financial position and financial performance during the year. However, of course, we don't clearly we don't just audit to that level. So the performance materiality again is a level for which within a single line of the accounts we would be having a conversation with Adam as to the need to adjust that particular line of account. Again, I would say we don't test to that level. We test below that level, but that's the level at which we would require adjustments to be made in order to satisfy ourselves in terms of the overall account opinion. And then finally, that's the level above which we will notify you if we have identified any differences once we've completed our audit. So you have complete visibility of the work that we've done and any differences that we have identified. It is the standard for all audit committees to make sure they're comfortable that that is an appropriate level. I would say it is the same basis on which we've set materiality in the past, and we see no reason to change that for this year. As I said, the numbers will be updated when we commence our year-end procedures. The only other thing just to say is, again, hopefully explanation that will be familiar to those of you who've been on this committee for a while, is that our work covers it covers the financial statements, but also covers what's referred to as the value for money conclusion. Our value for money conclusion is not a conclusion as to whether what the council is doing is value for money or not. That's a subjective decision which is left for others to decide. This is whether there are arrangements in place within the council to ensure that value for money can be delivered. So we will look at governance, we'll look at financial resilience, we'll look at the arrangements that are in place to ensure that decision making is appropriate for a council of this size and nature. So when we complete the audit opinion for the council, we will have an audit opinion that covers both, as I say, a true and fair opinion of the financial statements and the associated disclosures, and then a value for money conclusion. Again, same sort of format in terms of qualified or unqualified. I'll pause there, Chair, and happy to take any questions at that point.
Thank you, Andrew. I'm happy to take questions or comments. Councillor Tustine.
Thank you, Chair. I wanted to ask a question about the lease change, the new one you've put in. Could you just explain it a bit, please, in layman's terms?
So for this year, the only change is there are additional disclosures required. So there's no changing in the way that the council accounts for its leases. From 24-25, and for those of you who work in the corporate sector, you will recognise that this has been in place for a number of years. But there is essentially a new way of accounting for potentially some of the leases that the council holds, in essence, to bring them, hopefully this is relatable, onto the balance sheet as opposed to being, so they are more visible to readers of the accounts.
Councillor Isaac.
Yeah, all right. Thank you, Andrew. I wonder if you could help me understand better what the status of the 22-23 accounts is. You've disclaimed to give an opinion. I'm not sure what that means. Does that mean that they're draft and they could change significantly, or can we pretty much assume that the state that they're in at the moment is how they're going to be signed off? That's the one question. I've got a few others.
Okay, so a couple of things. So at this point in time, we haven't given, and the 22-23 audit for complete transparency is not one I'm responsible for. It's the one that Maria, as the previous audit partner, was responsible for. But we have not given an opinion, disclaimed or otherwise, on the 22-23 accounts. The 22-23 accounts are in draft and available for on the council's website. The proposed reset and recovery process, which is the legislation that I referred to, which is a combination of DLUC, the FRC, the NAO and SIPFA coming together to try and get the audit regime for local government back up to date, that would require a piece of legislation to allow audit firms to disclaim. So we have not disclaimed, but it would allow us to disclaim. Disclaim just simply means that you are not providing an opinion on the audit. On the accounts. What it would mean in practice is that it would be we have not given an opinion as a result of the legislation that is in place. So it's not particular to Basingstoke, was where I was going.
Okay, so we have another paper coming up subsequently. It's a bit unfair, really, but on you. But is a governance statement, and it does refer to the delays in the audit for 22-23, and it makes reference to the fact that there was some relationship to the amount of resources that EY were able to devote to that process. Is that a correct understanding of why they haven't been approved?
John, if I can just add a little bit of colour before Andrew comes in. So just for everyone's understanding, the 22-23, and Adam, please correct me if I'm wrong, the 22-23 audit work hasn't started. So the finance team at the council has produced the accounts. They are ready in draft, and Ernst & Young haven't started the 22-23 audit work, or they've done, or the only work they have done will be to the extent that they'll look at the value for money angle, but not the truth and fairness of the whole financial statements. And that is largely because of the government position on this. We're trying to regularise, I'll come to you in a second, Simon, with the government position on trying to regularise the whole local government audit market. Now, Adam and I did talk about whether or not we could go and get an audit somewhere else. Well, I mean, that is a good question. And but the way that the sector is organised, and we are under the some sort of group buying PSAA arrangements, whereby because of these problems in the audit market, the country is effectively sectored out, and Ernst & Young have the part of the southeast that we're in. And so there's not many other firms out there to choose from, I think, is the short answer. But I'm happy to broaden discussion on that, and I'm happy for Andrew to give his response.
So it's not a question of resourcing of the Basingstoke and Dean audit, as the chair says, that this is a nationwide, I guess, complication that's been caused over and has built up over a number of years in relation to, and I should probably caveat
Undercharging.
probably caveat this, but as of September 23, which was when 22-23 audits were supposed to have been completed per the regulations, there were over 900 audits that had not been completed, and hence why in July last year the minister at the time said that the right thing to do was to move to the latest set of financial statements in terms of audit firms focusing on the latest set of financial statements, and as the chair says, completing value for money work for any years of open audit. And the mechanism that allows us to do that is the piece of legislation that allows us to disclaim open audits.
My understanding of what this means is that residents won't have audited accounts for 2022-23. Conversely, the council will have a lower audit bill for that year. And that going forward for 23-24 and possibly for future years, we will have a question mark yet to be worked out over what's called the opening balances. So where we have our accounts, we have 2 years of financial numbers that we report. And that first year, which will be what's called the comparative, so it'll be the 22-23, those numbers won't have been audited. And so Ernst & Young will have different procedures or different views to take on that when we produce it. And there's a thing called the recovery phase, which I had a question about, and I don't quite understand. And Richard Hardwood has a question, and I know Simon did too. So, Simon, is your question been addressed?
No, it's a step back, really, and I feel that the need to ask it because the group leaders in the last municipal year had a big conversation, and we agreed as a full council that we'd have a new overview and scrutiny regime. And one of the things that we had a very big conversation about was what it says on the first page of this of the council report, not EY's report, which is recommended the committee notes. Now, we've already started having a conversation. I'm really unclear on the purpose of what we're being asked as a committee. So we're getting into conversations and discussions for people to analyse so they can understand it. Because we had this conversation as group leaders that says note could be as simple as this committee just has to have it put forward and we file it. Now, I'm really unclear about the purpose of this agenda item, and I'd like to have that clarified. Is it to understand it? Is it to review it? Is it to analyse it? Is it to make sure as an audit and accounts committee we've got a clear understanding of what the regime will be, because we'll be the ones that are reviewing it at the end of the municipal year? And if that's the case, and this is the first committee that I've sat on under the new regime, I think it's really important that we have different statements on the reports.
I personally think it's our responsibility to ensure that this audit plan has been properly prepared, and we believe it's appropriate for the needs of this council. That's my understanding of what we're supposed to be doing with it, but I'm open to other views.
I mean, I take your point on what note means. It's broad. The cover paper on here, this is broadly EY's report, hence it's quite a short cover paper on it. But I take your point that it could mean a whole lot of things. I think from my perspective, this is for your information as to what EY are planning to do and to ask and question it. So we could have expanded on that, but the report kind of asks questions of the committee and sets that out in there. So and I wasn't aware of the discussions previously in that, but I will take that on board for future reports to this committee to make sure that we're clear on kind of the intention that they ask.
Are you comfortable with that, Simon?
I am, and it's unfortunate because it's a tough one, isn't it? When you're the first report in the new regime, I just think it's really important that we all understand that, because that was the significance of the paper that we looked at the end of the last municipal year, that we don't have that as an item.
I'm fully supportive. I certainly don't want a committee of nodding dogs. I do want us to challenge things. So, struggling to remember who's next. Councillor Richard Harbold, not a councillor, our independent member. Sorry, Richard.
Thank you, Jim. I just thought I'd add a bit of background, really. As of last week, when I inquired of the PSSA, there were 659 opinions not yet given. And the interesting thing is that the first one of those goes back to 2015-16. So you're sitting with some authority somewhere that's not had audited accounts since 2016. And when it comes to the point of the accounts being audited is stewardship for the public, so they can see and know that the accounts are correct. And if you're in that sort of situation, then obviously it's a bit of a lottery as to whether your 2023-24 figures bear any relation to the alterations that might be made in 7 years or 8 years audit or whatever. So it's very difficult, I think, for Basingstoke and Dean, unfortunately, not in that position. The one thing I would say about your comment is that about the opening balances, there's a bit of a divided opinion, really, because there is a feeling that audit companies will find it difficult to do the 23-24 accounts without actually verifying in some way the opening balances. And that may mean that they actually have to do some extra work in the 23-24 audit. And I've heard the opinion that therefore although you will have a cheap 22-23 year, you should be aware that you might have a slightly more expensive 23-24 year, because there will be the need to verify some of the opening balances. I mean, disclaiming is something which of course is used in the corporate sector and is pretty appalling, really. I mean, it's the end for most companies if their accounts are disclaimed, and local authority is very unhappy about the use of the term, even though they're told it will come with an explanation. That really is a bit poor for local authorities generally, I think, and so it has caused a lot of trouble. If there hadn't been a general election, the regulations would have been laid in Parliament, where they have to be laid for 21 or 40 days, depending on your opinion, and that would have been done. And so the date of 30th of September 24 for bringing all this action in actually can be disclaimed or qualified. It depends really on the state of the accounts. If they haven't been looked at, as most of them haven't, then they'll be disclaimed. But unfortunately, the general election meant the minister wasn't nippy enough to actually lay the regulations before they all disappeared. So that we now don't know what's quite going to happen when Parliament reconvenes. when it'll be laid, and then there'll be 40 days. So it'll be a new timetable, have to be a new timetable. It's just not going to work as it is at the moment. But it is a most sad and regrettable mess, really. And you see, if your accounts haven't been audited since 2015-16, just think how many disclaimed years you're going to have, or qualified years. So you're lucky, really.
Thank you, Richard. I'm going to come to Councillor Isaac in a second. I would just add, we did ask, Adam and I met with Andrew probably a month ago on Zoom, and we did ask, and Maria, and we did ask at the time, would Ernst & Young do our 2022-23 audit, irrespective of the national position and disclaimers, because I think residents would quite like that reassurance. It's already in budget and so on. And the answer that I got was that Ernst & Young had taken a company-wide decision not to commence any new 22-23 audits. Did I get that right?
Correct. Under advisement from PSAA. So I don't start any that you can't finish.
On this stuff, and I think it's worth talking about and worth having it in the public domain. You know, we have pressed on this. And tried to seek out the right answers. So I hope that gives some reassurance, although not obviously an audit opinion of assurance. Councillor Isaac.
Yeah, I think this is a very helpful discussion and airing of this problem. It is for a council that's very well run in terms of the financial management of it. It is really concerning that we're not able to get the 22-23 year accounts audited, and that's because of a national problem and logjam. But I suppose that if I could just ask Andrew, as our sort of audit partner, what sort of reassurance can we get from you that this problem isn't going to repeat itself with 23-24?
Obviously, I'm going to start with I can't guarantee anything, but in terms of the 23-24 audit, we've been working with Adam and Sarah and team to schedule in when we are going to do the work. As Richard quite clearly says, there is a knock-on impact of the general election, and when deadlines will be set. But we are working to complete all our work in line with the timetable you've seen in the report. We are fully resourced to do that. For context, as a firm, we have both increased our headcount within the team, and actually under the new contract, we have chosen to take a smaller percentage of the market to ensure that, to your point, there is no risk that we won't be able to complete the audits that we're contracted to do.
Richard Harwood.
But there's just one point that differentiates 22-23 from 23-24, I think. The decision of EY and other auditors not to proceed with 22-23, because it wasn't only EY, was based on the fact that the audit planning guidelines hadn't been agreed, and so they in effect were starting an audit without knowing what they were going to audit. Now for 23-24, those audit planning guidelines and the NAO and CIFA's agreements are all in this thing that will be laid before Parliament. So it ought to be less mysterious for 23-24 than it was for 22-23. That is my only note of optimism.
Councillor Isaac.
Just one final question. In the report, there's reference to the council's pension fund and in being in deficit. And as at the 31st of the 3rd, 23, to the tune of 19.8 million. Now, I thought that our pension fund, the council pension fund, was fully funded. In fact, we were able to enjoy a holiday when it came to contributions. But perhaps Adam can.
Do you know which page you're referring to, John? Just for everyone else. 19, page 19, apparently, for everybody. Thank you, Namisha. Adam.
I'll take that. The actuary's view when the previous revaluation was that it will get to being fully funded, so there was no additional contributions. That is the correct figure from last year. This year it has actually reduced to around 11 million, obviously unaudited at this stage. but that is obviously administered by Hampshire Pension Fund. We are not responsible for that ourselves, so that is part of Hampshire County Council's administration of the fund. But it is in a positive position, and obviously the deficit has reduced to 11 million for this year for a year on.
So it's been in deficit for some time, is what you're saying? Because that wasn't my understanding. Right. Okay. So does that mean we have to make higher contributions?
No. As I said, the previous triennial review, so the pension fund is revalued effectively every 3 years, reduced that deficit down from, I can't remember the exact figure, but it was around 70 or 80 million, I think, at the previous one, down to around 19 million. And their view is that with the normal contributions that we make, the standard rate, we would reach balance, close the gap effectively, naturally with the numbers of members in there and the profile of kind of that. Obviously, it's an actuarial valuation, it's an estimate, and it's based on a whole range of things that I'm obviously not a qualified actuary, so I can't comment on, but there is no additional contributions forecast in the current MTFS to top up the pension fund, and we don't expect to be the case in the next few years either.
That's a good question. Thank you, John. Are there any other questions? In that case, I have just two things I wanted to draw members' attention to. I've lost my page because I've been looking at that one. Typical. It relates to the, here we go, other threats to the audit. Obviously, the audit team and or the audit partner need to assess, I guess integrity is the right word, and or threats to the audit. And familiarity is one, and I just wanted to draw the committee's attention to the fact that our Section 151 officer used to work with this team. And so, part of the rotation of the audit partner is to try and reduce familiarity. So I just wanted to get the audit partner's comment and view on that.
Thank you, Chair. So hopefully members are aware that Adam used to work for EY, and both Nim and I worked with Adam whilst he was at EY. That was 6 years ago. We are comfortable having assessed the situation and documented it as such that we are independent of Adam and obviously the council on a wider status. And in terms of our assessment of that independence, we do it at the start of our work and when we reassess at the end. So happy to reconfirm that when we come back at later committees.
Thank you. And there's just one other thing I wanted to draw attention to and or bring out the question that someone else asked earlier, which was in relation to fees. Obviously, we're under a new PSAA arrangement and our audit fee is significantly more than it used to be, but perhaps more in line with the level of work required. I think the question, I think it was Richard raised it, is there more work required on our 22-23 opening balances? Will that affect that number, or is that included in there, or have you not crossed that bridge yet?
The honest answer is we haven't crossed that bridge yet, but simply because, as Richard said, the guidance on what's required is not yet been established. So, as again, as the picture becomes clearer, we will have conversations with Adam as to the implications of that, and clearly update the committee at appropriate points. Thank you. That's a fair cop.
If there are no more questions, I'll bring that item to a close. I'd like to thank Andrew and Amisha for coming in. It's a fair old journey, and with Zoom and other stuff these days, people tend to like to do long distance stuff. But it's great to see you in person. Thank you for coming along. I thought it was a really constructive discussion. Thank you, members, for your questions. They're the right questions. And I'll just ask, are the committee happy to note the EY Audit Planning Report 23-24? Simon is. I can't see anyone else. Yes, I think we got a yes. Thank you. Thanks for coming. You're welcome to hang around for the rest of it if you want, or you can make your excuses and leave. It's up to you.
Thank you. I think as it's the first one we've attended, we'd like to stay if that's okay.
Most welcome. We'll move on to agenda item 7, which is the annual property plan 23-24 year-end report. Now, this paper has a pink paper index, which is commercially confidential. So I would ask members to, if we can deal with questions that don't address the appendix first, and then if you do have any questions that relate to the pink appendix, then we will need to go into closed session, and there's a special bit I need to read out for that, and Phil will need to turn the video off. So I just want to draw your attention to that, and if we can do all the public stuff first, that will help. But inevitably, if it does fit the question that exists, we might have to do it mid-session. I will ask the portfolio holder, Gavin is here. Thank you for coming. Hello. If you can introduce the report, please, Gavin.
Yeah, very little to introduce. You've read the report. I think for new members, it's always beneficial to say at this stage that one of the luxuries this council has is that we have an extensive property portfolio, generates £19.4 million a year in revenue. That's twice as much as we get from council tax. And that property portfolio is entirely owned by us without the use of external borrowing. So we hear local authorities getting in lots of financial trouble because their rent receipts no longer match the interest they're paying on their borrowings to get that property. We are not in that world. So we are in a very, very fortunate position. It's kept this council going well for many, many years and will continue to do so in the future. We have a property investment strategy, and the large part of our property is the investment bit, and probably the bit most people are interested in. We have a property investment strategy. It was put in place by my predecessor, Councillor Audit. It's a very good document. We've maintained it, we've sustained it, we've kept it. It will come to review, is it next year or the year after? But it's serving us well in terms of identifying property that isn't delivering for the borough, and where we can, we recycle money. We're not looking to extend or expand our overall property portfolio. We're simply recycling units where they're not generating good revenue, or we don't think we can get best value for that property, to better property for us. And that way we've managed to continually increase our rental income. It's about 6.1% return we get on our property, which is far in excess of what our Treasury management achieves, despite the challenges of the property market overall. You will see, if you look in that document, that the value of the properties has shrunk. That's not unusual. In reality, the value of anything only matters when you come to sell it. And so you'll see that Treasury management went through a period of flux as interest rates changed substantially. As interest rates have gone up, the interest in the wider external market investing in property has gone down because you can get good value out of lending money in other ways. We expect that to pick up, and obviously COVID did change the way we look at offices. Retail hit a bottom, it's now bouncing back up again. So we're constantly watching all that kind of stuff. This year there's been no significant changes to our investment property in terms of what we own or hold. There's lots of work going on in the background around rent lease re-gears and looking at the rental, and always we look at, are we protecting the council taxpayers' assets? Are we getting good revenue income from those properties, and also are we going greener? And so whenever we come to any property review, lease gear review, we have to balance those factors to make sure that we're trying to achieve all three as best we can. Obviously within there as well, very important is our operational property, probably less exciting from a value point of view. There are significant values in there that have changed. We've got a new value of this year, so the value of the Anvil has gone down, but it's still one of the most fantastic places to listen to live performance in the country. Fantastic acoustics, and therefore the value probably matters less in that sense, in terms of we have the Anvil not to make money but to entertain and bring culture to the borough and attract acts to the borough. So you'll see that value has changed quite a bit, which is not something that should concern us. So that's pretty much where we are. Obviously, in terms of operational property, there's a constant programme of renewal, quite a lot in the capital programme. That never ends in terms of improving both the things like leisure facilities, retail, etc., but also some of that really very operational property that you never see. This building being one of them, but obviously we've got work centres, etc. We're constantly trying to make them better places to work, make them greener, but that doesn't really change the value. So that's it. A year of not much activity in terms of big moves, but part of that is the market itself. Obviously lots going on beneath the surface in terms of making sure that the council extracts the best value it can from its assets.
Thank you, Councillor James. Before I come to Councillor Minisbound, I'd just like to check if our property officer Liz Surratt has anything to add.
No, I don't think so.
Thank you, Liz. Councillor Minisbound.
Just to be really dull, Chair, if I may, it's another paper that says to note. So I'd be really appreciative to understand the purpose and what we're going to be doing as a committee. Why?
I think we go through and I'll see if there's any comments or questions before people are happy to note the receipt of the paper. Councillor Tustain.
Thank you, Paul. Yeah, I just wanted to ask about what we're doing to mitigate any risk on voids, particularly things like the malls, where it is obviously retail property. And also I think we have got some of our ageing stock, and Gavin, you did mention there's quite a lot of maintenance work and stuff going on, but how solid are our buildings on some of these things? Because I think some of them do need more than a lick of paint, and just what we're doing to mitigate risk around that sort of thing as well. Thank you.
Well, I don't want to run through a list of all the properties we own and where they are. Clearly, part of the assessment we do is, there's items on the agenda later that you'll see listed for disposal where the property is in a state that we don't think we can get best value for it. Someone else could. So that evaluation is always made, is are we better off letting someone else deal with this property, or is it so strategic we need to maintain it ourselves, or is there a way of perhaps extracting more value from the property? So each individual property has its own sort of individual piece. In terms of our operational properties, there is a maintenance regime, an ongoing regime, particularly around community centres and things like that, where we just keep them going, apart from Westside Community Centre, which is a whole headache of its own. We are constantly looking to improve, and part of the new lease agreements that were put in place, which again was sparked, I think, by my predecessor, which we've continued with, is to make sure that the occupier maintains that property the best they can, and we're not fully burdened with the whole thing, but we do make sure that those community centres can keep running. So I don't think there's any particular properties that we have a problem with, but probably would fall into pink paper if there was. So, but if you've got any buildings that you think that's awful, Gavin, do we own it? Let me know, and I'll find out for you.
Councillor Meansbound.
Just to pick up on that point, just to be really specific, Gavin, under item 14 here, operational property, and 14.2, it's really specific to say a capital programme's been worked up for the operational property. And I just wanted to be clear, because it's probably less pink papery, because it isn't necessarily of commercial sensitivity, it's an operational property, as far as we're comfortable about the level of capital required in those 25 years to maintain those properties, because they clearly are of very different ages and levels of life expectancy. Have we got enough money, was the question.
Well, as you'll know from anyone who's been a cabinet member for finance, we've never got enough money, and it's about time the government sorted that out. That's my standard line I'll go to. That's why you have a programme. You have to identify it, and you'll see that in terms of our capital programme that we've got, we're making a £4 million contribution from revenue to capital, recognising there are some ongoing costs, pressures that exist within the operational portfolio. So we have got to adjust our revenue budgets. We've had to adjust our revenue budgets to meet that cost. Obviously, things like SEAL money and 106 money can support and help with that. And there are cases, I mean, I think Westside is a good example of a site that actually it was cheaper to rethink the whole thing rather than try and regenerate. So there is a programme for our community centres already in flow. That's part of why the lease rollout is going to be delayed, because clearly we haven't got enough money to fix every community centre to gold standard right now. So it's an ongoing programme that will outlast me, I would imagine.
Councillor Isaac, you had a question.
Yes, Chair. It's good to note the progress that's been made over the and what's proposed in the property plan for 23-24. I do understand that valuations can change because of sentiment in the marketplace towards certain types of investment, particularly industrial, and that's why there's been this big drop in the value that's ascribed to Danes Hill, a drop of 10.9 million. I suppose we've got new valuers, and obviously the new valuers have decided that the anvil is worth 15.5 million, whereas the previous valuers thought it was worth 20.4 million. I assume that Liz and her team challenged that because it is it seems to be there's no particular reason why the value of the anvil should have moved so fundamentally, and it is an asset of the boroughs, and so one doesn't want to see £5 million disappear out the window. So That's one question. The second question is, given we've got a target of net zero for our operational property by 2025, how are we doing on decarbonisation of the portfolio? And thirdly,
Can we just do
yep, sorry,
time?
yeah,
Is
sorry,
that all
yeah.
right? Because otherwise I can't count past three very effectively. I'm going to go to Adam first on that, because I know that there's a nuance to the way that you value operational properties versus the way you value investment properties.
Yeah, so I'll answer the first question around the valuation of and it applies again to most of the operation assets. Prior year, they went up quite considerably, and they're valued on an existing use base on a depreciated replacement cost, which basically says what's the state of the building now and what would it cost you to rebuild it. There was a big spike last year in building costs and things which drove the value up. As you say, this year it has come down a bit, so there's a lower estimation there. Plus, obviously, as you say, we have had new valuers who have different opinions on them. So it's not necessarily saying the Anvil's worth any less, as Councillor James indicated earlier. With all the operational assets, is more about the service delivery that we care about for residents and what the Anvil delivers along with the others, rather than the valuation here. In terms of that 15.5 or the 20.4 would only matter if we came to sell it. They have no net impact on the general fund, which is what matters to residents at the end of the day.
On the mic there, John.
Yeah, and question was about progress on decarbonisation of the portfolio.
Do you want to say that one?
Yes, can do. That's sort of headed up by my colleague who looks after the operational properties. But yes, there is a programme in place, and we're working closely with our sustainability team to make sure that we're on track with that.
I'll come to you in a second, Simon. I would just say at 13.4, we've seen this table of EPC certificates come forward to 3 or 4 committees over the last couple of years. And the progress now is very good, and I just wanted to congratulate officers on the progress on that in particular. Where I can't remember where I was going next. Simon.
Well, I was partly going to make that point. Thank you very much, Chair. Was actually that's huge progress in EPCs, but I'm also conscious in 13.3 that was our goal. So it looks like we've achieved the goal. And my question is, what's next? Where do we go? Is it all of them in C and above, or at the moment we don't seem to have something we're aiming for?
It's probably a question for Councillor Tomlin, but Liz, are you happy to take that question away for Councillor Tomlin?
Yes, I was also going to say within the property investment strategy, there is a target of a B. That may not be achievable, but we're looking at that with the new legislation coming in for it to go up to a C by 2027 and then B by 2030. I think we're still, the government's still thinking about that, as whether that will be implemented, just because of the difficulty with retrofitting. So we're aware of that, and we're working out a plan to meet those deadlines.
Councillor Isaac.
Yeah, final question. We've got a target of achieving 4 lease renewals per annum for community association facilities, and given that a lot of those community associations are keen to get contemporary lease arrangements in place, not least because it might help them in terms of attracting grant funding. How are we doing in terms of hitting that target of 4 lease renewals a year, which doesn't seem terribly sort of testing?
I think Councillor James wants to answer that.
I'll get an update for you on that. One of the challenges is, as you mentioned, I think Simon mentioned, the capital cost of, before you sign over a lease, you need to sign over that lease on a building that's in very good structural condition. Clearly the internals become part of the responsibility of the community association running that centre, but the external, the roof, the walls, the windows, etc., are our responsibility. So we have to get it in a good standard before we hand it over. Now that's obviously a lot of work, lot of assessment, a lot of surveying to be done. So the 4 is probably more set around what can our property services team deliver in terms of surveying the property and getting contractors in to get it up to a standard, and the capital funds we have available to deliver that standard before we sign the new lease, rather than simply writing a lease. So I'll get you an update. Obviously the paper only passed through full council, I think it was about 8 months ago, 9 months ago. So we'll get you an update on where we are. But 4, I think there's an ambition to do a bit more than 4, but I say it's probably the capital, what's within the capital budget to fund those improvements, rather than, Fiona will know more probably about what's, Sarah will know more about what's in the capital budget, not much. So that's what's going to take time.
Any other questions? I just wanted to draw attention to 11.2, 99.47% debt recovery. Well done. That seems to be very high and should be commended. And also under 8.1 rent reviews, the rent review number increasing since the last report because of the ongoing data review of the property management system. So this is the implementation of the new software, which obviously shows we're much more organised now, which is great. Liz?
Yes, I mean predominantly we've now got that sort of continuity within the team with permanent members of staff, and we're doing this ongoing review to check that looking back at the historic records, that they've been entered correctly. It is the same system, but it's basically we're putting more information on there and populating it because it will be retendered over the next couple of years. Thank you.
There's one other item that I had a question on, which is, and I know that I think Councillor James and Councillor Isaac have already referred to the property investment strategy in positive terms. If we look at page 74, property investment strategy acquisitions, carrying value 7.8, a further write down of £1 million at the end of March 24, now carrying at 6.8 million. That's the Premier Inn Hotel that we purchased a freehold of, I believe, on an 18-year lease with 18 years of tenant lease still to go. It's always dangerous stroke easy to have the benefit of hindsight and look back on this stuff. And I'm sure that we went through the proper processes and that it meets our diversification and our income needs and various other things. What I would say is, we've taken something like a 22% plus paper write down on that. There are no plans to sell the hotel, but it's less about the fact. There's less about that. What's troubling me with this is that if we had waited, then we could have bought the same property 22% cheaper. And that's kind of the way I look at it. So, and I don't really want to unpick that decision, or I'm happy if people want to talk about it. But I guess the conclusion I kind of reached on this is, could we refer the property investment strategy back to the team or back to Cabinet and ask them to look at that and how that decision was reached, and whether we can, as a committee here, we are a governance committee and we have a duty to look for constant improvement. And I just look at that one and I just feel that our property investment strategy has failed in some respect on that property. I don't know what other people think. Councillor Meansbound.
I wonder if I may add, I think there's something about not taking one property in isolation, Chair, because I think it's one of those things, isn't it? You said hindsight's a wonderful thing, and probably as a council we'll look at other things which were very highly criticised at the time, like the Costa at the leisure park, which probably did almost the opposite, that it gave us much more than we wanted and it's a really high return. So there may be something about comparing and contrasting to say, if we took more than one case study through it, what works, what doesn't, through the strategy, and is there some way that you could improve it that wouldn't, in some respects, if you like, improve one but make the other one worse?
I think it's a good point, Simon. I guess I'm just suggesting that does this committee want to recommend that strategy gets looked at earlier than 2026? Is that worthwhile? Is that a recommendation this committee should make? My experience of this stuff is that Cabinet could ignore it, or Councillor Tuster.
Yeah, I think it would be worth having a review, because I think there was an element within that particular purchase that it seemed a little bit rushed through. I think that was a sort of a general sort of undercurrent of chatter, shall we say. So it'd be interesting. I think it'd be worthwhile having a look at that and talking about it.
Thank you. I guess I'm I'm just thinking if this, and I don't know the exact process that was followed and went through, but it's the sort of thing that I would expect to have been decided by a panel or not this committee at all, but a panel of several officers, and I don't know how that happened at the time, or whether it was one officer, or what the delegated powers are around it. And I guess that's the bit that I'm interested in, whether we can improve, because I'm not sure it's fair to put it on one person's shoulders. Councillor Isaac.
Yeah, well, as a obviously a influential party to that decision at the time, I think there's, I'm not sure how valuable it is to look at one particular investment. And I think the other thing you've got to bear in mind, as Councillor James has said, is these things are valued at a particular point in time, and depending on what the market sentiment is towards that particular type of investment, like hotels, it can reduce in value, and then in 6 months' time, 12 months' time, it will be looking completely differently. And I think the other thing I'll just make is that that there was a window of opportunity to buy that property, if I recall correctly. So it did mean that one needed to move reasonably quickly. I'm pleased to say that this council can move quickly when it needs to, and I can assure you that there was full due diligence taken and full processes were followed in the decision to proceed with that purchase.
Thank you, Councillor Isaac. I'm sorry if I wasn't clear. I wasn't questioning the process. I said I thought the process was robust. I was suggesting that we perhaps look at the strategy a bit earlier and just see if we can improve it earlier than 2026. That was all. And I wasn't intending to just pick out, although it is just one property, and it's unfortunate it's in the table as one property and so on. I really didn't want to unpick the investment decision, which I'm sure was taken on the right basis at the right time. It's really about how we can improve going forward, rather than looking back and saying, with the benefit of hindsight, because I don't think, no one has a crystal ball, right? So I'm sorry if that came across the wrong way. Councillor Meansbound, you had a question? Or
I was, it's one of those things, isn't it? There's something about taking the balcony view and saying, well, how does this council do generally for me? There's something in here that will always make me feel uncomfortable. There's a statement in there that turns around and says, do you not hang on with industrial because industrial's forecast to be okay and be the top performer in 5 years. And there are always those sorts of things and advice that we get. And for me, that's one of those balcony moments that you then look back at it and go, do you know what? Was that the right advice? Were they the right advisors? And we constantly go through that process. So I have no problem with reviewing it, but I think it's just taking that step up, isn't it? And going, well, actually, all those things considered, generally, are we doing all right? Or are we doing really good? Or is it shockingly bad? I don't think it's shockingly bad, but there's no harm in a review.
I completely agree. I think the holistic position is excellent, and I just think it's just we're just seeking, we're hunting around for small improvements. I think is the reality. Does anyone else have any questions or comments on that? Councillor Tustain.
I think just on that one, actually, I think that's it's. I think a lot of the time it's about transparency, isn't it, for everybody, particularly on this committee. And I think this is something that we've been working on to make things a lot more understandable, so that we can actually function in a very effective way, because it's quite a heavy topic, audit and accounts, for a lot of members who aren't in accounting and things. I did have a second point, actually, Chair, that I'd like. Just looking at the Daneshill Industrial Estate, and that one did seem to have the biggest reevaluation, and I just wanted to, if there's a little bit more detail around that and what that might be about, if that's not going into pink paper stuff, Gavin.
Liz?
Sorry, did you mean about the
Daneshill.
Daneshill? I don't. I mean, that is predominantly industrial, so it will be sort of what we've said before, in the fact that the sort of the demand generally, that's the sort of the market and the change in valuers.
Okay. I think then I did get enough nods to just make that as a recommendation that goes to. I'll take Liz and or Adam's advice on where we recommend that to, just as a consideration of an earlier review of the property investment strategy. But apart from that, I think we're done. If the committee would happily note the report. Thank you. But did anyone have any questions on the pink paper? Do we need to go into closed session, or are we happy to continue? I think we're happy to continue. Thank you. Moving on to item 8, the draft annual governance statement. So this is the governance statement that sits in with our published accounts, and it covers the council's approach to the many-spoked wheel of its governance. I think it's probably the right way to describe it. I'll ask Adam to introduce.
Thank you, Chair. Very briefly, and you'll be pleased to see, Councillor Minas-Bound, that this is to approve the draft governance statement. So this sets out the review of the governance of the prior year and accompanies alongside the accounts. This is the draft version, which once you've approved it tonight, or hopefully approved it tonight, will then get signed by the leader and the chief executive. It explains how the council's complied with SIPF's code on local corporate governance and how we've met various regulations through the year. The main changes in the AGS this year are a reference to the review and changes to the scrutiny committee, which have been mentioned earlier from this municipal year. Reference to the updated council plan that was approved by council in October. An update on the transfer of the local enterprise partnership function to Hampshire County Council that took place on 1st April 2024. And then again, as was highlighted earlier, some of the references to the delays in audits, that's a national issue. The point of highlighting that was around the fact that although one of the key elements of governance is obviously the external audit opinion, that's not been provided for 22-23 and therefore cannot be relied on, but that's more to do with wider national issue rather than a specific issue that would indicate a governance issue within the council. That was all I was going to cover, but I'm obviously happy to take any questions on that or any comments on the statement that need to be reflected before it's made final.
Are there any comments or questions? Councillor Isaac.
Yeah, Adam, can I just drill a bit deeper into this, what's happened with the local enterprise partnerships? They're now, because they were significant players, particularly in the context of Basingview, and now they've been transferred to Hampshire County Council, and in the report it says that there's a memorandum of understanding that's being put together with Hampshire County Council on how Basingview will be operating in future. Is it possible to give me some idea of what the significant effect of that will be in terms of our ongoing role at Basingview? Because it's basically our estate, isn't it? Yeah.
To put simply, not too much. Hampshire County Council were already the accountable body for the local enterprise partnership, or at least part of it, because the Enterprise M3 crossed over into Surrey as well. This was a national government decision announced, I think, one of the budgets previously, that the functions would transfer into upper tier authorities, and effectively all the staff moved across. The work on the enterprise zone remains the same with Hampshire County Council, and the memorandum of understanding doesn't change in terms of how we had the relationship with the previous LEP, so that the idea is that mirrors the arrangement there. So hopefully not too much will change there in terms of that. Some of the projects around the 5G living lab and those sort of things, which Councillor James is less happy about, but are still ongoing, and other work there as well. So hopefully that answers your question.
Well, will we still have the involvement of the private sector in this? Because the LEP did contain a number of representatives from the private sector, which was one of its strengths.
That would be for Hampshire County Council to determine how that will work. I would imagine so, and to encourage business into the area in the same way. But I obviously, as I say, that would be a question for Hampshire County Council, unfortunately.
Councillor Minas-Bound.
Thank you, Chair. We shouldn't underestimate, should we, the importance of some of those projects. We can talk about the LEP and its generality and say that the responsible body is now the County Council, but the 5G Living Lab is significant. I would say of even more significance was the fibre spine between Guildford and Basingstoke, and that really underpins some really important economic growth for our town. And I'm not sure, Chair, where we go to make sure we get an update on those projects. It probably isn't here, but I wonder if we could leave that with you.
I was just wondering exactly that, which is the right committee for this, because I think it does need to be looked at in a bit more detail, and we do need a bit more information, because this is a governance statement that goes through and is just stating that as a fact, and I don't think it's fair to press officers any more on that when it may not be the centre of their job, unless Councillor James, you have anything to add on that, or you can shake your head. I don't mind.
I'm actually going to a county council meeting on Thursday, and I'll ask the question then about how we deal. I think with things like the 5G Living Lab, that's less of an issue because it's contained within the borough. It's been agreed. It's sitting there, still sitting there in our capital programme, much to my annoyance. And we've been talking a long time about where is it going to go, and if it stays there any longer, it's going to go to the bloody Willis Museum. It's going to be so old. That's where it'll belong. So there's that one. The cross-border issue with Guildford's more interesting in terms of how that still works. I mean, I think essentially LEPs are dying a death in terms of there's no more government money coming in, and you normally need a bit of government money to trigger a bit of private sector investment on top of that. So I think it's very much down to the next government to decide what their strategy is. But that particular project I will try and find out a bit more about and let you know.
Is that something that will go to another committee, Gavin, or is that something that will come back as a question at full council, or how do you see that playing out, or is that just an email to this committee or to Simon?
I'll get an email to Simon and the rest of the committee. I'm not sure where it would go because it's quite a specific.
Councillor Meansbound.
I was just saying, I suggest it goes to economic infrastructure, or what the new EPH is called, because there's something about the importance, and I absolutely agree with you, Gavin. The 5G Living Lab is relatively contained. There was a lot of money in our budget. I think it's £1 million. Isn't more than that? But actually, the fibre spine will transform some of the development in our town, and it's really important. And I know that was really tricky as far as who would own it. And it has such importance. I think it's really important that it's not just a note to me, that it goes to a committee.
So, Councillor James, are you happy to refer that to the chair of that committee? Thank you. That's a good conversation. Thank you. Are there any other questions on the annual governance statement or comments? I'm not seeing any other hands. I've got a list of about 4 or 5 typos. I won't go through them now because it will send everyone to sleep, but I'll share them with Adam afterwards. I think overall it's a great paper. It's heavy reading, I think, and we did have a chat before the meeting about some of the officers' plans to make it more digestible going forward. So that's not a significant challenge. That is a significant challenge, I think. Councillor Meansbound.
The only thing on a more forward-looking is I light-heartedly talk about noting, but I'm just conscious that governance was something that came up in the LGA Corporate Peer Challenge. We have changed our constitution, we've accepted a new regime, and there's something for me that says, you're quite right, Chair, we've got a really hefty document, but it's really important those conversations have happened to make sure we see the behavioural changes. And I don't know how we make sure that happens, and I'm looking at cabinet members and senior officers to make sure. I don't want to be annoying and say every committee it says no and I'm not happy.
Adam.
So I think at the next committee, the local code of corporate governance will come along, which is the current year and what we're going to do to address some of those things, so we can reflect that. I will obviously feed back to my senior leadership and my leadership colleagues as an officer group to make sure that the papers reflect that point. I think it's a really, really fair point, and I hadn't appreciated that. So I will take that action on, and obviously I'm sure other cabinet members, when they're reviewing their forwards and things like that, will make sure that the recommendations are clear and those sort of things as well. So hopefully that helps.
And I want to be really clear, if I may, Chair, I see that as a joint responsibility with cabinet members, joint leaders and the SLT, because that was a big conversation we had as group leaders to make sure our governance was strong and not poor.
Okay, I think...
I was just going to say the challenge from a cabinet point of view is, I totally agree with Simon. We've sat at group leaders, we've sat on the Constitutional Working Party for years, and there's nothing worse than coming out for the evening just to note lots of stuff. And we wanted to get away from that, so actually you're feeding into decision making. The challenge for the cabinet is this particular committee should be very little to do with the cabinet, apart from having our feet held to the fire in terms of justifying the decisions we've made and why we haven't stopped Adam or Sarah or whoever making their decisions. So I don't want to shape what this committee decides to look at. I think there are things like the annual property report is probably okay, but the quarterly monitoring, actually, if we've done a deal, should we bring that and say, this is what we've done, so you can give us feedback on that rather than bringing the whole thing. So there's some work to do around what this committee does, but I don't think I'm the one to shape it. It should be down to the committee to tell
I completely
senior
agree.
officers and me what they want.
This is a rear view mirror committee. We're looking at the results of the prior year and the year before that. We're looking at investment performance or property reports, 6 months to a year in arrears. And I think this statement is the statement about what we've achieved with regards to governance in that particular year that goes with those published accounts. I think that the question of how we improve our governance going forward is something that this committee's looked at from its perspective with regards to the review of effectiveness, and we'll review that review of effectiveness again later this year, Simon. But I think that the council's governance as a whole, I think it's actually in great shape, and I think this document sets out it's in great shape. I appreciate that noting reports is an issue I hadn't really it's an issue I've raised at full council actually, but it's not an issue I'd considered in the context of governance, frankly. But I can see how that comes about. So I'll wrap it up there on that one, unless anyone's got any questions or comments further. Okay, I think we are to approve that draft one. So do we approve it? Yes. Great. So that goes to the leader and the head of paid service for signature after we've dealt with a couple of typos. Thanks. Moving on to item 9, the Treasury Management Annual Report. I just want to draw your attention to a supplementary paper which should be on your tables, which has the corrected chart 1 at 2.1 on page 7. Page 7 doesn't look right. I think that's the wrong page number on mine, but that's the one that corrects the chart on page 113 of the report. So I'll ask Sarah to introduce this report.
Thank you, Chair. So again, I will assume that the committee have read the report and reviewed it already, but so the purpose is to give an update on the 2023 outturn position for the Council's Treasury Management function. Just a few headlines on the year's performance. Total net income for the year was 5.89 million against a budget of 4.68 million. The average income rate of return was 4.37%. And the budgeted return was 4.33%. So again, we overachieved on that front. The total Treasury investment balances at cost was approximately 111 million as at the 31st of March 2024, with average balances for the year around 135 million. And the breakdown of the 111 million is in that chart 1, the supplementary paper with the numbers on for the pie chart. Benchmarking with other local authorities, and this is where we benchmark with Arlene Close's clients. The council continues to perform favourably with the lower risk investments, and the council's returns still compare well. That's on section 7, charts 4 and 5 on page 120. All investments remained within the approved Treasury Management strategy limits for the year. And this report is asking for the committee to review the report and provide any comments to be included for the final version of the report to be noted by Council in July.
Thank you, Sarah. I'll take any questions or comments. Councillor Isaac.
Yes, it's interesting reading the report, and it makes the point that we're unusual compared to many councils in that we have so much of our treasury management, 58%, in long-term externally managed funds, whereas most councils, according to the report, are around about 22%. It seems to me that as a council, we're also unusual in having such a huge property portfolio, which in a sense is like a sort of fixed, like bonds. They're very secure. And so my question really is there a case for looking at how much we have, how much percentage of our treasury management invested in long-term externally managed funds. And because if there's a very helpful table here, if I can find it, table 4, which actually shows how the externally managed funds in bonds have performed over 8 years. And if you average that out, it's 2.49%, which isn't great, actually, in terms of overall performance, compared to our own internally managed funds, which, I mean, it useful to have that for an 8-year period. We've got it for 1 year, so it's invidious to make the comparison. But I just wonder, given that we've sold one of the bonds, Aegon bond, recently, I just wonder if there's a case for looking at our approach to these long-term externally managed bonds, whether they're actually whether we should have so much invested in them. And Adam's itching to answer me.
I think it's a great question, John, and it's a question we've been asking on this committee for a couple of years, and I'm sure before I joined the committee as well. Thanks for doing that analysis. I'm not sure whether that was a straight line or whether you did compound through that, but it's okay. But it's but you're right. No, but you're right, and I think interestingly it ties in with the chart 3 on the other page. But I'll hand over to Adam, because I've often been of the view that, well, let Adam.
Let me try and answer it at least. I'll address the point around the bond performance. Yes, that was 2.4% or whatever you worked it out as, but obviously that was in the context of 0.5% base rate and very, very low returns on cash, which is predominantly where our internally managed investments are. And obviously base rates have increased over recent years, which is why the performance of internally managed has improved. At the moment, we're finding actually investing with the Debt Management Office of the Treasury and into Treasury bills is actually quite effective. So that's where we are putting a lot of our own internal investments. We have obviously divested from the one bond of 15 million during this year. We are constantly looking at where that best investment is. Obviously, the bond holdings were for long-term purpose, and actually we're getting a fairly good return in comparison to wider kind of returns in the market. But obviously that's changing, but we've got to make sure that we're divesting at the right points as well, so that we're not that we're returning the funds that we've invested. But it is under review. We are looking at options within the Treasury Management Strategy this year, and there obviously are large capital programme requirements in future years as well, which again some of these bonds will be divested to invest in delivering some of that as well, as we progress through those sort of things. Hopefully that answers your question.
Councillor Isaac.
So I noticed also in the report that we've appointed Link. I can't read my own writing here. Link Services as Treasury Management Advisors. So presumably, fresh pair of eyes. They will be able to look at this. And do I gather from that then that they have assumed this role in place of Arling Close? But Arling Close. So this was a tender, was it, or a competitive tender? But Arling Close continue to have a role with the external fund management services.
Adam.
Yeah, I'll come back on that again. Yes, so it was we did receive competitive quotes from Arling Close and Link, and as you pointed out, I think this committee has over several years been indicating that Arling Close obviously been advisors for quite a few years, so it was a good opportunity, I think, for us to look at getting some different advice. They will, of course, look at our portfolio, and we will take their advice on board. It's early days. They were appointed from April, so we are working with them at that transition period. And yes, Arling Close we thought actually was helpful to have still involved in the externally managed bonds as well, just to kind of continue that for now. We will revisit that, but actually having a different pair of eyes across the board is useful, we felt, and I think that was feedback again from the committee, particularly last year, around perhaps a review of kind of what Treasury Management advice we were receiving. So we'll update the committee as that relationship builds.
Councillor Isaac.
Yeah, through you, Chair, really, an opportunity at some point to meet Link would be good.
Sure, I'm sure that's already planned, but I don't know when. And Adam's nodding.
Yeah, we haven't agreed a date yet, but we can agree one with you, Chair. But they will come along and provide training and similar things that are included and introduce themselves. I think we felt that at this point in the committee cycle, where there's quite a lot of new members and a heavy agenda, probably wasn't appropriate. But we'll probably look at doing that later, perhaps in September.
Councillor Tustain, you had a question.
Thank you, Chair. Yeah, it's actually about, it's a sort of a 12.3. Interest paid was mostly related to interest on Section 106 deposits refunded to developers and was not related to borrowings. It's not really an accountancy question. It's actually about, do we give Section 106 money back and pay interest to developers on it?
I know. I'm glad you raised that, because I hadn't actually asterisked it, but I did my jaw to drop a bit when I read it. Adam?
I might defer to Sarah on this, who may know more. She's going to cringe at me like on that one. I mean, it's a relatively small amount, and a very small amount is handed back, and that will be interest accrued over a number of years, I would imagine. But I'll let Sarah add anything.
Yeah, I don't know the exact breakdown of the transactions in 2023-24, but what it usually is where a developer paid on the signing of the agreement, and if they didn't implement the planning, then we have to return it, again with whatever interest rate is quoted in the Section 106.
I think I read it in the context of if we receive some Section 106 money and then don't deliver the capital improvements for a couple of years, then that generates income, and or we have to refund the income. That's how I'd read it. But I think it just underlines how important it is that we deliver quickly and spend it quickly, and that shows how important the capital programme is, right? Because the sooner we get it out doing what it was intended to do in the community, then the better. If there are no further questions, then I'll ask Councillor Minspound, do you have a question? No. Then I will ask the committee to note this report. Oh, okay, got that wrong. That's not what it says on my chair's brief.
Sorry, Chair.
That's all right.
It's on page 109, so it is recommended that the committee reviews the report and makes any comments to be included for consideration by council. So if there are none, then it will go on to council. We will update the recommendation to council to make it clearer what we're asking council to do.
What he said. Thank you. We'll move on to item 10, the Audit and Accounts Work Programme. So just looking at what we have coming up in July, 5 weeks' time, we will have draft annual report of this committee. So when we did the effectiveness review last year, we looked at the SIPFA guidelines, and initially that brought Richard Harwood onto the committee as our independent member, but there were several other things in the SIPFA report that we assessed. And as part of that effectiveness review, a couple of things came out of that. Well, a handful of things came out of it. One of them was more training for this committee, and we've already touched on that with regards to investments. And there's a piece under AOB I want to raise around training. But also, one of the recommendations was that the committee reports on its effectiveness to full council, and it should be doing that. So Adam and I have been working on a draft report that will come to this committee that will then just go to full council. Just sets out what we do from our statutory perspective, or we did last year, more like, and how we continue to add value, I guess, which is why the recommendations that come forward from this committee, however minor they are, it is about just feeding back and tweaking what we do, and so that will come forward in July. We've got the Housing Benefit Subsidy report, the Local Code of Corporate Governance 24/25, which Adam referred to earlier, which I think drives the governance during the year and is then reported in the rearview mirror in the annual governance statement next year. We have the viewing of social networking sites, which is, and then we have the Regulation of Investigatory Powers, or REPA report. We have the Internal Audit Progress Report. So Paul and Richard will be here to inform us of the work that has been going on with internal audit, and we'll also have internal audit's annual report as well. We'll also have, I think, UC Valoran, who's the head of IT, attend to talk us through where he's got to with cybersecurity. One of the things that came out of our internal audit reports was quite a lot of orange and red items on cybersecurity and on IT patches and so on. And I know that UC's been working very hard to get through those. Some of them are interdependent and can only happen when other certain things have happened in the business or when other certain patches have been applied. So it will be great to have him along to just give us some reassurance about progress there. We have the fraud update, protecting the public purse, coming forward as well. Looking further out, the external audit results report, 30 September 22-23 report, I think already based on conversations tonight and based on government and parliament and the regulations, I think that's possibly going to push to the next meeting in November. And similarly, the 2023-24 audit results report may not be ready in November, so that might come forward in January. And then there's quarterly investment appraisal reports, quarterly property reports, which are missing off this list, which Democratic Services are going to add. You can see we have quite a busy agenda for the year. We'll try and dice it up and make it digestible for you. I don't know if anyone's got any questions or comments on. Councillor Isaac.
Yeah, I'm not sure I understand what viewing of social networking sites is about.
So this is where. So this is where council officers investigate, look at social media use to inform the fraud picture, I believe. I did pause on that one because I thought that was the same as regulatory or investigatory powers, but I think that's where council officers sit in cars outside properties with binoculars. No, I'm kidding. I don't know if anyone's got anything to add to that. Help me dig myself out of that hole. No? Okay. Any other questions on the work programme? What I would add on that actually is that this council does use those powers, but it uses them very sparingly, and we always look at it carefully and are always pleased that they are used sparingly. This isn't and shouldn't be a snoopers charter, so I just want to reassure residents of that. Any other questions on the work programme? In that case, I will just go to AOB training. So I think Adam's running some financial training or has already this week. It's this Thursday. And then there is some further financial awareness training planned specifically for this committee, which relates to how we look at and or interpret public sector accounts. And we're planning to do that for an hour before the next committee meeting. So on the assumption that you're up for that, we just have to make a decision about whether we want to start that training at 6 and hence start audit committee at 7, or whether we want to start that training at 5:30 and start audit committee as normal at 6:30. Just to give you an idea, looking down that July work list, I reckon that's probably an hour and a half meeting. So if we start at 7, we should be done by 8:30. It's really a question of when people can get out of work and other commitments, and whether they prefer to start at 5:30 or 6. Councillor Tustane.
I think 6 is reasonable. The only thing I'm saying, you say it's an hour and a half for this lot, but if there's going to be, how much reading will there be prior to it?
I think some of these reports are quite short. I've seen the internal audit report already and the annual internal audit report because they were going to come to this meeting, but we've clipped them and moved them. And again, they've done some in striving for constant improvement. They've done some work on making that report easier to read and or more digestible. You won't quite get as much information, but all of the information is available on the intranet. So it's really about trying to focus where we look rather than looking through it all. I'll leave it to Richard Bevan to explain how he's trimmed that information at the next meeting. Does anyone want to? Anyone else got a view on 5:30 or 6 o'clock start? Not bothered. We'll go for 5:30, Adam. I think that was 6 o'clock. There you go. With that, unless anyone else has any other, unless anyone else, it's such a liberal. This is supposed to be a non-political committee. I'm sorry. Any other business from anyone? And I'll close the meeting at